Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, the Philippine peso opens at a fresh all-time low of 59.17 to the dollar. As the palace says, the armed forces is verifying the list of alleged destabilizers against the Marcos administration. JC Punongbayan, the assistant professor at UP Diliman School of Economics, joins us live. Romeo Lumagi has been sacked as Bureau of Internal Revenue Commissioner. The palace appoints Department of Finance Undersecretary Charlito Mendoza. Farmers in Camarines Sur decry the misallocation of funds outraged over the anomalous government flood control project. We have an excerpt from my thought leaders interview with the Cacao Project founder Luis Babulo. The Philippine peso sank to its lowest level ever on the back of optimism over the end of the U.S. government shutdown and pessimism about the state of the economy. The peso closed yesterday, Wednesday, 59.17 to the dollar, slumping by 18.5 centavos from its previous close. This surpasses the previous record low of 59.13 against the dollar on October 28. One trader told Business World that the dollar strengthened after the U.S. Senate passed a temporary spending bill to fund the government until January 2026, moving closer toward ending the longest shutdown in history. John Paulo Rivera of the Philippine Institute for Development Studies added, stronger dollar demand is supported by expectations of a Fed rate cut in December. On the domestic front, the peso is being dragged by weak sentiment due to the corruption scandal and a succession of typhoons. The Philippine peso opens this Thursday a tad stronger, 59.13 to the dollar. Mike Ricafort of RCBC says the weakening peso, along with the PSEI's upward correction and lower bond yields, are setting off rumors of an off-cycle monetary easing, particularly a cut in the bank's reserve requirement ratio. President Marcos abruptly replaced BIR Commissioner Romeo Lumagi with Finance Undersecretary Charlito Mendoza. Marcos signed Mendoza's appointment paper yesterday, putting an end to Lumagi's 3-year stint in the tax agency. It is unclear if Lumagi was fired, moved to another position, or has resigned. Lumagi was appointed BIR chief in November 2022. Under his watch, the agency exceeded its collection target for 2024, a feat not seen in 2 decades. Just this week, however, Lumagi told Business World that the BIR may not reach this year's target due to the corruption scandal. He has also announced a major personnel overhaul in regional offices. The President and the First Lady are principal wedding sponsors to Lumagi and his wife Carmela Esquivas. Mendoza heads the DOF's Revenue Operations Group. Prior to that, he served as Customs District Collector for the Port of Cebu from 2019 to 2022. President Bongbong Marcos led the launch of Oplan Contra Baha, a project aimed at minimizing, if not eliminating, Metro Manila's perennial flooding problem. The president says the target is to decrease flooding by up to 60% by fixing pumping stations and continuous cleanup and dredging of rivers. All these should be done consistently and without fail for at least 9 months.
Ngunit, even after that 9 months, ay patuloy lang, regular na ang paglinis, pag-desiltation, paglinis ng basura. Lahat ito ay patuloy natin gagawin. Hindi natin pwedeng tigilan dahil alam naman natin umiipon pa.
Oplan Contra Baha is a public-private partnership project that will enlist the help of business sector frontliners. The initiative will be expanded to Central Luzon and will also target the maintenance of waterways.
Kailangan natin yung private sector dahil sila ang tumutulong at mabilis gumalaw. Kaya't nandito si Manny Pangilinan, nandito si Ramon Ang, silang dalawa ay nag-volunteer na sila na ang gagawa sa marami dito sa kailangan na gawin na trabaho.
The peso hovers at a fresh all-time low, but we've seen a recovery a tad stronger in the first hour of trading. The peso's now trading at 59.13 versus yesterday's 59.17 against the dollar. It closed at 59.17 Tuesday against the dollar, with markets getting spooked over Powell's remarks saying the armed forces is verifying the list of alleged destabilizers against the Marcos administration. The destabilization reports come as the investigation on the anomalous flood control projects drag on and as third quarter GDP slows to 4%, worse than forecast. Well, with us now for more is JC Punongbayan, the assistant professor at UP School of Economics. Good to see you again, JC. Welcome back to the program.
Thanks for having me again, Cathy.
Okay, so since 3Q GDP came out last week, there have been more data that have been released. Our FDIs are down. BAR expecting lower tax collections in Q4 because of the flood fund fiasco. So could we see far lower GDP results in the current and coming quarters?
Well, this is already very disappointing in the sense that if you don't count the pandemic, this is already the lowest quarterly GDP growth rate since 2011. In fact, this is the first time in a long while that the contribution of investment spending has been negative. So that really speaks to some of the problems when it comes to investment spending, specifically government construction. When I got to parse the data actually coming from the Philippine Statistics Authority, and the biggest decline in investment spending came from that, the decline in the contribution of government construction. Of course, different agencies, especially the DPWH, are now more cautious in terms of spending on public works. There seems to be a trade-off between high infrastructure spending but corruption-ridden on the one hand, and then we already saw many years before during the Aquino administration that they were very cautious about infrastructure spending. However, that led to rather slow growth. So hopefully one day we can see a time when we have fast growth of infrastructure spending, but also not ridden with corruption.
So when's that one day, JC? Because right now that kind of caution is translating into some sort of a paralysis, which leads us to think that the 5.5% to 6.5% forecast range is unachievable for this year.
Exactly. We might see a situation as well where the economic managers might again downgrade or reduce the target, which they already reduced it from 6 to 8%. If you remember the first State of the Nation address of President Marcos, he wanted 6 to 8% for this year. But fast forward to this year, it's down to 5.5% at least. But even that is seemingly impossible already. We need 7% growth for the last quarter of this year, which is all but impossible. So there needs to be an overhaul in the way we do our public works, because this is not really sustainable.
So where are you benchmarking now the potential forecast range for the GDP this year, and how are we going to compare with our ASEAN neighbors?
Well, at the same time that we're seeing a slowdown of Philippine GDP growth, Vietnam is growing very robustly. And in fact, latest data show, I was able to parse one of the best comparisons of incomes across different countries. Vietnam already overtook us in terms of GDP per capita. And in fact, Vietnam is already higher than Indonesia using the latest statistics. So the contrast is really quite stark between the Philippines and Vietnam. And unless we're able to fix governance in the Philippines, boost investor confidence. And by the way, you mentioned earlier, foreign direct investments have gone down significantly. If you look at the annual data, it's quite high, but it's stagnated. It's not increasing as much as the Marcos administration wants. There seems to be malaise in the Philippine economy, and we need to fix this as soon as possible.
And that malaise is showing up in the Philippine peso. It's fallen to a fresh all-time low 24 hours ago. We're seeing a bit of a recovery, but still at 59 to the dollar. What are the implications in both growth and inflation?
Well, the interesting thing here is that Governor Eli Remolona of the Bangko Sentral ng Pilipinas is a lot more willing for us to cross the threshold of 60 pesos per US dollar and allowing the market to really determine the correct quote-unquote correct level for the Philippine peso US dollar exchange rate. This is in contrast to the stance of former BSP Governor Ben Jokno, who allowed the selling of international reserves of dollars in the market in order to defend the peso in that way. But now even the BSP is acknowledging the possible role of the corruption scandal affecting investor confidence. And this is really a symptom of what's really going on in the Philippine economy. And it's a good reflection, actually, of what's happening rather than a cause of major problems. I don't think that inflation will be affected too much, even if we cross the 60 pesos per US dollar threshold. So yeah, it's more of a symptom rather than a source of our problems.
But it is a show of disappointment among foreign investors. If the peso continues to fall, there's that political risk premium that people have to think of. The palace is now thinking and also saying that the AFP is verifying the list of alleged destabilizers against the Marcos administration. What sort of an impact do you think this continued escalation in political risk having on the way people want to invest their money in Asia and how they're considering or not considering the Philippines?
Oh yes, it's in the middle of November. Many political things will still be happening. For example, the upcoming protests, the INC protests, the massive protests there, and then also near the end of this month, and also the budget, which will be railroaded possibly up until December, and then we expect as well the ICC to make to take certain steps, and so many things politically will still be happening, and investors are definitely on the lookout. So I expect if things continue as is, we might be finally crossing that 60 peso threshold if the BSP does nothing to defend, quote unquote, defend the peso.
We have a final minute here, a reenacted budget. Is that a possibility in 2026? And what are the implications?
Well, it remains to be seen because the Senate made certain pronouncements that they, for example, want to remove the unprogrammed funds in the budget. But I doubt very much that they will be able to do much on that front. So I expect that they will be able to finish the budget for this year. However, we expect it to be pork-ridden as well. We're not expecting too much by way of reforms this year.
All right, we'll leave it at that. Thank you so much for the update. JC Punong Bayan of the UP School of Economics. And the Philippine economy is at risk of further falling behind its ASEAN neighbors. BPI lead economist June Neri says this could go on if public spending issues continue to divert attention away from economic reforms. At our current growth rate, he says, it would take 2 years for the Philippines to catch up with the GDP per capita of Vietnam, 4 years with Indonesia, 14 years with Thailand, 26 years with Malaysia, and 70 years with Singapore. He notes the economy has been too reliant on consumer spending, driven by overseas Filipino worker remittances and the BPO industry. He says the country needs structural reforms in the country to accelerate growth and close the widening gap with its neighbors. The 2025 Asian Forum on Enterprise for Society concluded with a call for more business partnerships that contribute to social development. Our mobile journalist Fatima Baduria reports.
The 2025 Asian Forum on Enterprise for Society concluded with a call for more partnerships between businesses to turn economic opportunities into ways of helping the society progress. Ayala Corporation Chairman Jaime Zubeldi Ayala urged enterprise leaders to forge partnerships, advancing societal development along the way. He called for businesses to take action against social issues during his closing keynote for the forum in Makati City.
By helping communities solve pain points and realize aspirations, enterprises engender trust and confidence while providing more fuel for the economy's expansion.
He emphasized how enterprises should recognize their role in their community, setting their purpose and taking action toward sustainability.
Businesses should work on creating economic opportunities in a way that also addresses society's biggest needs, challenges, and pain points.
He draws from Ayala Corporation's past ventures into electric mobility, healthcare, and education. While remaining profit-driven, Zubel de Ayala says the corporation is operating toward sustainability with commercial resilience at the goal. Kapatid Fatima Baduria, we are One News.
You're watching Money Talks. Coming up, Cacao Project founder Luis Mabulo weighs in on the impact of flood control scandal on local farmers. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Farmers are outraged over the misallocation of funds in anomalous flood control projects, money which could have gone to building farm-to-market roads to help turn farmers profitable. The Cacao Project founder, Luis Mabulo, said the impact of anomalous flood control projects on soil health is huge. Here's an excerpt of my thought leader's interview with her. Stakeholders who respect governance, transparency, accountability, problems now that we face with the anomalous flood control projects that have an impact on soil.
Yes.
Well, what impact do you see it having in your area for farming?
I think it's not just in my area, it's all across the country where misallocation of funds, for example, into flood control projects and even farm-to-market roads, which I think is going to be the next thing to be explored, is incredibly damaging because our farmers need better access to markets and they also need protection from floods and storms. The wrong implementation of flood control programs is a problem because it can cause more flooding instead of preventing it. And that's going to impact our farmers, it's going to impact homes and lives, and people will keep thinking of survival instead of thinking of what they can do better or next or how to make more profit. And even with farm-to-market roads, just better market access. That's already a huge thing for farmers where they need to have enough income to transport their goods to a market or to a place that they can consolidate and process. So it's going to impact us all in many different ways.
So far, what are their sentiments right now in the path forward? If they can't get the help that they're getting on a high level, what are they willing to do amongst themselves and with you and in the farm?
So I think the collective feeling right now is outrage, honestly. And I think it's well-deserved. I think a lot of us do feel that it's been unjust, that a lot of these farmers, even no matter how small their income is, they still pay good taxes. And I think the path forward for us is we do what we can in our own communities. And that's trying to make more income for farmers so that every election, it's going to be a controversial statement, but their votes can't be bought out.
Catch my full interview on Thought Leaders Thursday, 9 p.m. Philippine Standard Time, live streamed on YouTube and other social media channels. Hopes that the U.S. government will shut down will finally come to an end boosted the markets yesterday. The Dow jumped by 0.6%, closing above 48,000 for the first time. The S&P 500 rose by less than 0.1%, and the Nasdaq tumbled by 0.25%. The benchmark 10-year Treasury yields ticked down to 4.066%. Gold prices settled 2% higher, $4,204 per ounce. With the gold rebounding in recent days, strategists at UBS predict that the precious metal will reach the 5,000 mark sometime in 2026 or 2027, citing its growing role as a strategic asset. U.S. futures seeing marginal changes in after-hours trading. As you can see, the Dow is up less than 0.1%, S&P and the Nasdaq down by less than 0.1% each. Asian markets mostly lower in the first hour of trading this Thursday. The ASX 200 in Sydney down by about 0.75%. South Korea's Kospi is down by less than 0.1%, and Japan's Nikkei 225 up 0.4%. And a quick look at our own markets. PSCI opens this Thursday lower by about 0.1%, 5,704. The stock market rebounded by 1.5% yesterday, Wednesday, recovering from a 5-year low the previous day. Regina Capital says investors engaged in bargain hunting after days of heavy selling. The broader all shares index jumped by nearly 1%, with all counters in the green except for holding firms. To recall, the Philippine peso opened today slightly stronger, 59.13 to the dollar. The peso's dipped by 18.5 centavos to close at 59.17 against the greenback, the local currency's worst finish ever. The 10-year government bond yields ticked down to 5.896%. The Securities and Exchange Commission has approved the 15 billion peso fixed-rate bond issuance of the Metro Pacific Tollways Corporation. The pre-effective approval was issued Wednesday for the bonds with an oversubscription option of up to 5 billion pesos to be issued in up to 3 series with tenors of 3 years, 5 years, and or 10 years. The target public offer period will be on November 17 to 21. MPTC intends to issue the bonds in the Philippine Dealing and Exchange Corporation on December 2. The net proceeds from the maiden bond offering are intended to partially finance continuing investments in the construction of the Manila-Cavite Expressway, Cavite-Laguna Expressway, and the Lapu-Lapu Expressway road infrastructure. Despite a weaker-than-forecast economy, some key players in banking, mining, and property still posted strong third-quarter results. SM Investments Corp reported a 6% rise in 9-month net income to over 64 billion pesos, led by its banking arm, which accounted for half of its earnings. President and CEO Frederick Di Buncio said SM remained resilient despite weather-related challenges, entering the final quarter with cautious optimism. Nickel Asia Corp more than doubled its third-quarter net income to over 3 billion pesos, boosted by strong exports and higher nickel ore prices. President and CEO Martin Antonio Zamora said tight global supply continues to prop up prices, a trend expected to hold as Indonesia enforces stricter mining rules. And Alliance Global Group's 9-month profit rose 34% to around 17 billion pesos, backed by strong office and mall operations and tight cost control. CEO Kevin Tan said its diversified portfolio and growing international spirits business helped lift earnings despite global headwinds. There's going to be a global shortfall in travel and tourism workers over the next 10 years, according to the Industry Council. So what kind of jobs will be in demand and AI-proof? Jade Agustin has that story.
The travel and tourism industry will be a key driver of jobs in the coming years, but faces a shortfall in workers over the next decade. That's according to a recent report by the World Travel and Tourism Council. Their data shows the industry is expected to generate 91 million new jobs in 10 years. But because of demographic and structural shifts, the industry may be facing a problem.
Based on the current trends and a report that we're going to release this week, 20 major economies could face a job gap. 43 million jobs before 2035 are going to have a challenge. And that's not a number. That's a potential waiting to be unlocked.
Here in the Philippines, the country missed its international arrivals target in 2024 by a lot. The target was 7.7 million, but only 5.9 million came in. But with the government resuming its e-visa policy for Chinese visitors this November, the hope is that the industry will get back on track soon. Tourism is estimated to contribute 11.7 million jobs by the end of the year, and that's the second highest number of workers in the sector in Southeast Asia, according to the Economic Impact Report released by WTTC in partnership with Harvard Economics. The most sought-after workers globally are those in low-skilled roles and those who can fill jobs that rely heavily on human interaction and services that cannot be automated. Because despite the advancement of artificial intelligence, experts agree tourism will remain a people-to-people industry.
I think, you need to replace some jobs to make the journey and the experience of the visitors more pleasant and easier and more cost efficient, but you need to protect many other jobs to make sure that the opportunity to convey and to share your beautiful culture is always there.
In a survey released by WTTC, adapting to technology is among the three main challenges facing the labor market in this sector. It follows the biggest problem, which is the recruiting and retaining of talent. Also, a top concern is employee well-being and inclusion. The WTTC is calling for what it calls urgent workforce planning, meaning working with governments and policymakers around the world to ensure the right policies are put in place. This includes enticing more young people into the industry, laying out clear career pathways, investing in digital literacy, and making it easier to recruit abroad. I'm Jade Agustin. We are One News.
And before we go, here's something fun to watch over the weekend. Although it's still Thursday, Shrek the Musical has officially arrived here in the Philippines, now with an all-Filipino cast. The Broadway hit brings a hilarious and heartwarming tale of love, friendship, and embracing what makes us unique. Catch it at the Newport Performing Arts Theater, running through December 2025. I'm looking for Gingy. Remember what he said? Be good. Well, that is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Kapatid, we are One News. All sides, all the time. Have a great day ahead.